If you're running or investing a small business, here's some good news. You might be eligible for extended tax breaks under the Qualified Small Business Stock Rules, or QSBS for short. These breaks can make a big difference when it comes to capital gains tax. So let's break things down into what's new, how it works, and what you should know before taking advantage. The QSBS is a special section of the tax code, Section 1202, that lets investors in certain small businesses exclude a portion of their capital gains when they sell their stock. In simple terms, if you buy stock in a qualified small business and hold it for at least 5 years, you might not have to pay taxes on some or even all of the profits when you sell. Historically, the exclusion amount varied depending on when the stock was acquired, but with the latest updates, the expanded tax breaks makes this benefit more accessible and valuable. In many cases, up to 100% of the capital gains from the sale of a qualified stock can be excluded at a limit of $10 million or 10 times your original investment, whichever is greater. This expansion is designed to encourage investment in innovative startups and growing small businesses, especially those that are creating jobs and driving economic growth. It's a win-win. Small businesses get more access to funding and investors make a meaningful incentive to take part. Not every business or investor qualifies though. To take advantage, the business must be a C corporation and meet specific criteria related to its assets and activities. Plus, the investor needs to acquire the stock directly from the company, meaning not through a secondary market, and hold it for at least 5 years. There are a few caveats to keep in mind. Certain industries like finance, hospitality, and professional services are excluded, and the timing of when you acquire the stock can affect the amount of the exclusion. That's why it's a smart move to talk to your tax advisor before making any decisions. They can help you determine if your investment qualifies and how to report it properly. If you're thinking about raising capital or investing in a growing business, it's worth exploring how QSBS could help you save when it's time to cash out.